Wow, I've been getting so much feedback and so many great back test results from our students with this sexy line touch pitchfork strategy. And one thing though is some of the newer students are asking me for a very simple video to show how it works. So I'm going to try to keep straight to the point. We're going to go through a classic setup, and then we're going to look at one of our students back testing results from and some of their sample trades that they've done, and look at the good, bad, and the ugly. So let's get started. First off, this is a pitchfork, and hopefully you can see this pitchfork is trending up. It's pointing up. So we will, first rule is we're going to trade only with the direction of the pitchfork. This is, in terms of what a pitchfork is, this is the median line. This is a fib rejection zone, and this is a fib rejection zone, or we often call it our gold zone. Two gold lines that price is most likely to bounce off of. And then, of course, we have our outside lines. So in an upward sloping pitchfork, we're looking for price going up, 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 and up, and then slow down and come down and touch our rejection zone, the bottom rejection zone, bounce off it and take offwards up. Now there's something very special, and there's a reason why I love pitchforks and why I use this in my strategies. I have a computer science and math degree, and I love it when we have back tested, and this is why we call tested effects, because we go back and we test thousands upon thousands of times and figure out the probabilities of every single interaction. And it turns out, and this isn't something, you can Google this and find out for yourself as well. We didn't invent all these stats on pitchforks. They're actually well known. But once a pitchfork bounces on this fib zone, the odds of it reaching the center line is 80%. That gives you an amazing advantage because now you have a target. And if you trade with the pitchfork, your target is actually always increasing. So in this case, the price is approaching, then all of a sudden you'll see it usually touches the top 1, 2, or 3 times, and then it starts working its way down. And we're looking for it to come across 3 lines. 1, 2, and here we have the 200 EMA serving as our third line. We call this our sexy line, and that's because price thinks these lines are sexy. Any line that's just outside of where it's supposed to bounce is called a sexy line, and it'll reach out and just touch it before it reverses. And that gives us a precision entry. So we would then, of course, want to go long right on the touch of that sexy line, and we'll target just past the center line because we know that the line is going to be going upwards. So I've found if you just go a little bit further, that gives you just a little bit more room on your stop side just in case price goes a little bit further down. We set every trade to 4R. 4R is crazy, by the way. I have a trading friend, he said 4R trades. He said 3R trades are amazing, crazy. 4R trades are godlike. And our lowest trade that we ever do is 4R. What 4R means is my risk to reward is 1 to 4. So when I lose 1R. When I win 4R. Now, if you're betting correctly, if you're doing proper risk management, you're always going to be betting 2% on any one trade, 2% of your account balance. That means that if you win a trade, you actually win 8%. And when you lose a trade, you lose 2%. And that's amazing because when you get even 4 winning trades, say you get 4 winning trades in a row, and that does happen from time to time, you just increased your account by 4 times 8, because we go up 8% per win. 4 times 8 is 32. So you just increased your account by 32% in 4 trades. It's insane. I can't say anything more about this. It's just absolutely an incredible strategy, and I hope you you learn the strategy and become profitable as I have doing this strategy. So this is a typical setup, and I think it's very straightforward. When you see a trade, a pitchfork forming, you're going to watch, and watch, and you're waiting for price here. This little pitchfork, price never comes down and touches here, so there's no trade. But when price comes down and touches our fib zone, you're looking to go long, and then you're looking for a sexy line because we know that price is likely going to want to sneak through. Okay, let's look at another case. So in this situation, we have a downward sloping pitchfork. Price is working its way up. We get a warning signal as price crosses into our rejection zone. So we are now looking to go short. But as you can see, assuming we don't count this 50 EMA, we don't have anything right here to confirm our trade. So what we do is we will turn on another set of pitchfork. So up till now, I've been showing you modified shift. And by the way, I always add the tool, the Tested FX Pitchfork tool, twice to a chart. And on the first, I just leave it at default. It defaults to showing Andrews pitchforks. And then I switch it over, turn off the Andrews and turn on the modified shift. And that allows me to quickly, I can scan with one type of pitchforks and then I can just turn the others on when I'm looking for confirmations. And that goes like this. So I turn it on and boom. So now, and as you can see, it gets really messy. That's why we do not scan with both sets of pitchforks on. So now, I'll just turn it off quickly here so we can see the difference. So we're looking for a confirmation here somewhere, okay? And typically what I'm looking for is either 3 line touches or the outermost line. If I can get even better price up here. Here we see price goes through 1, 2, and 3. So technically we can get in right here on this cross. So we would trade on that entry right there and go short. And we would target. We're going to turn off these crazy pitchforks because it's confusing. Now we're going to target just past the center line. All right. And we're going to set this to 4R. There we go. And we can see a beautiful winning trade. And that's how we do it. So you can either use these as sexy lines, or you can use, so you can either use the 50 EMA as a sexy line or the 200 EMA as a sexy line, or you can turn on the other pitchforks and use them as sexy lines. I would rely on the pitchforks more than the 200 or the 50 moving average. It takes a little practice to get to know when it's going to bounce and go through with those. If you're generally, what happens is if you are in a consolidation time, like you see here, price will bounce up and down through and not bounce off 200 EMA. It's only if after it hasn't touched it for a while that it's likely going to bounce. So it takes a little bit of practice on that. So in the beginning, maybe don't even worry about those and stick to the pitchfork intersections. So you'll just scan along. Whenever you see a new pitchfork, look for a rejection and just turn this on when you see something starting to happen, looking for a confirmation. And that's how you do it. So you just count 1, 2, 3 and enter. And that's how it's done. So I hope this helps. And now we're going to watch some student examples and comment on the good, bad, and the ugly. Okay, trade number 1. I've set up some questions for us as we go that we're going to answer. It says, what rule does the second trade break? Well, let's take a look here. So let's look. There's trade 1 we'll ignore. And trade 2, what do you see wrong with this? So we see a little bit downward sloping pitchfork and upward sloping pitchfork. And he said, okay, I'm going to go for line 3. 1, 2, 3. So far, he's following the rules. And it's really good odds that he's going to win because this little pitchfork setup is within a bigger pitchfork And both of those two big pitchforks, actually there's two big pitchforks, and they're also both sloping down. Very good chance he's going to win this trade. But there is something wrong with this trade, and he's chosen to ignore it because it was such a great setup and he did win. So it's hard to argue with success. But in general, we are looking for white space or empty space above our stop zone. We don't want to see lines, actually even our entry. You know, you can have one line in your stop zone, but he's got a bunch of lines here. It's just a little bit scary. The only thing I'd say that's going for him is this is an outer line of a strong pitchfork, likely to contain price. These sexy lines, man, if price did get up here, it would want to touch those and he would get stopped out. So we're looking for white space above the trade. So let's go on and look at another example. Why is this a risky trade? Okay, let's take a look at it. So in this case, again, he wins, but why is it risky? Take a look and see, why is this risky? So where are the major, he's betting down, and almost all the pitchforks are betting up, and the major pitchforks are going up. But more importantly, as you can see, you can't quite see this other trade, but you can see that it looks like it's an uptrend because this was the last high and now prices reached a higher high, and so we're in an uptrend. So betting down is actually quite scary. He does get away with it, and it's an amazing trade, and he picks up 8% on his account. That's awesome, but a little risky. Also, not a lot of white space above. Let's look at this one. What is really good about the second trade setup? All right, so let's ignore this one and look here. What is really good about this? So I'll see if I can pull this up and we'll get the answer in, and you can see as well. So I'll go through and explain it. Okay, so number one, we have two upward rejection zones or gold zones. This one is gray just because it's an older one from before, but it's still valid here. That's why it's still drawn. And so you have this one pushing up, you have this one pushing up. So that's amazing. And then if that wasn't enough, we have a median line coming through to support price and cause further possibility of an upward bounce. And then if that wasn't enough, he's got the 200 EMA sexy line within the stop zone right here. Look at this. 200 EMA, it's within a stop zone. So price did sneak down and want to touch that. He's still okay. So that's a really great trade setup, and of course he makes another 8% on his account. And by the way, this particular trader is a complete newbie. You might notice that he's got JPY, GBP here, and for anyone who's traded, we all know it's GBP, JPY, but that's okay because the rules work in both directions. It's pretty amazing, huh? And but yeah, so complete newbie. Even on it by his second day, he was already trading profitably using this system, and I believe he's traded profitably every day. He keeps posting his results every day, and so it's pretty amazing. Okay, let's take a look here. So what's wrong with this trade? What's wrong with this setup? Let's look at it. Can you see what's wrong with it? Let's take a peek here. So price is approaching from above, okay, and does not make this median line. Now, there's something else I need to teach you. When price bounces, it's 80% likely to reach the median line. But if it fails to reach the median line, price will take off in the other direction, often very hard. And we don't want to go against that action. So in this case, price comes down. It does appear to bounce off a outer line, but it fails to reach this median line, which causes a lot of a failed bounce, because if you remove all these lines, all you're going to see is a failed bounce attempt to get to this line, couldn't do it, and it's going to go pretty hard in the other direction. So we don't want to bet against that. So that's why that is not a very good setup. Okay, let's look at this one. Why is this a good entry? What do you notice about this? Look at this. It looks like it's already a downtrend. All the pitchforks, all of them are all facing downwards. Every line is pushing this price down right now. So very high probability of success on this trade. Very good. Oh, yes, and also a decent amount, when he entered the trade, there was a decent amount of empty space. All right. And why is this trade likely to fail? What's wrong with this? Why is this trade likely to fail? Pitchforks don't agree. There's no obvious trend. And you're betting against the 80% median rule. So what does that mean? All right, so let's take a look here. So there's no obvious trend. It looks like price, I don't know the high here, but it looks to me like it's kind of just going along and no obvious trend going on. And the pitchforks are going in every different direction. It's so confusing. I can't see what's going on here. And the other thing is, once prices bounce and starts to come down, it's 80% of the time going to reach, from this pitchfork, 80% of the time it's going to reach this median line. And we're betting against it because the median line is not within our stop zone. Not good. However, he does redeem himself because the very next trade, he enters again, and this is not something we teach, is to re-enter when you lose. That's not what's going on here. This is just happens to be the next valid setup that's right after this one. And but this one, he's got the median line passing through. He's got this rejection zone. He's got another outside line pushing up. So he's got 3 lines pushing up. And if that's not enough, he's got the median line that price wants to reach and a lot of time bounce off of. So he's got a lot going for him in this trade. And so he enters the trade. It should be right there. He drew it a little bit low by accident, but it should be right on that median line, or on this line would have been fine because that would have been 1, 2, 3 lines. As long as the last line, is within your stop zone. And then after that, we see lots of white space. Very good. And then there's something else going on here. It forms a double bottom with the second bottom slightly higher than the other. So when it bounces, it's very likely to reach the targets easily. So very good. Love that. And let's look at this. And why did this trade have a high probability of success? All right, let's look at it. So what's going on here? We've got downward facing pitchfork. We have a downward moving 200 EMA. So very good. We've got line 1, 2, and 3. And let's look here. So there's another thing to notice. So this is something I'm going to teach you that you may not notice, but price is already moving down the channel, down this large pitchfork, and it's bouncing off of the 50 EMA, being kept down. It finally breaks through the 50 EMA. Often, if you just watch price, and this is something you probably don't know, but I'm going to teach you, once it bounces off of the 50 EMA, it'll then bounce off of the 200 EMA a lot of the time. And so you marry that fact with a downward sloping 200 EMA and a downward sloping pitchfork, and you got yourselves a great trade setup. We got line 1, 2, and 3, and again, he drew it a little bit too high, but it should be right on the entry should be right on the outside of that pitchfork, targeting just past the center line. Very good trade, amazing. Okay, and what's wrong with this trade? Let's take a look here. Okay, we've already talked about this before. So price, he's expecting price to go short here, go down. Okay, so let's just look here. He's saying this downward pitchfork, and what's happened is price is already above our rejection zone. So it's already, this is a very advanced technique, and I'm not teaching this to beginners, but since he did it, we'll talk about it. This is a break and retest. So if it breaks down and touches the center line and then comes up, it'll often then bounce down from here. And he's said, okay, it's going to bounce down here, but I'm going to use the 50 EMA sexy line as my entry point because I know it's probably going to reach out and touch that. All that logic was good, but what he didn't realize was that this was a failed attempt on the median line, and a failed attempt on a median line, whoops, I don't know what I just did there. So this was a failed attempt on a median line, and that is a recipe for a hard reversal, and that's exactly what you see here. If price tries to make that median line, 80% of the time it's going to make that median line, but it can't make it. It doesn't have enough energy. There's too much upward pressure, and it gives way and just flies up and rejoins the upward sloping pitchfork that it came from. And this is a very common thing when you see pitchforks going in two different directions. Price sometimes will jump before they get too far apart. It's like a spark. It'll try to jump to the other pitchfork. But other times it'll come up and I'll bounce off the outside of the other pitchfork. None of those things are within our strategy. They are not high probability trades that we want you to attempt to do. So let's stick to the easy stuff. Let's have price, if I wanted to see this trade, I'd want to see price bouncing around down here or somewhere in this zone and then work its way up and then touch this and then do a sexy line touch here and then I'll go short. That's what I'd like to see. I don't really like seeing this price working its way from above. And if I do see that, it needs to be strong and it needs to touch the center line, not miss it. So that's the rule there. And what's wrong, this is our last setup, I think here. What's wrong with the first and third trade? Actually, I think there might be one more after this. So what's wrong with the first and the third trade here? Let's take a peek. So first trade, this breaks our messy line rule, and there is very much no space above here. There's very little space. If you look above here, he's got one line in his stop zone, but not far away. We've got this line, this line, this line, and now we're out to the outside line. This is a no-go. This is not a very good setup, not enough white space because he entered the trade right here and he would have seen at that time all this right here, way too messy, not good. However, then it comes up and it tries this level again, and of course, it's possible it could have went down. However, when it went down, tried to touch the center line, and look at this, it missed touching the center line. On a missed center line touch, what happens? It takes off and speeds right through. So the second trade is actually a bad setup as well. And then the third trade, it's the advanced break and retest that he's trying. And it does work. And the reason why it does work is because it bounces off this outer line, comes down, and touches, actually it touches the outside line, not the median line. So this is actually not that great of a setup here, actually, now that I look at it. but he gets away with it, and that's awesome. You know, even when you make mistakes, these bounce points are so powerful that you tend to win anyway. And yeah, so we looked at that, and I think that's it. That was our last trading setup. So I want you to go and try this on your charts and send in the setups. I love to look at students' setups and give critiques, and you can see why they worked and why they didn't. And remember, unless you try, even if you fail, unless you try and fail, you're never going to figure out all the situations where you should or shouldn't have traded. This is not the easiest strategy to follow, but it is probably the most profitable strategy you're going to run into. We're seeing results where we're able to flip an account in 38 to 50 trades, and I actually have a video on this channel of me doing a account flipped in 38 trades, and it's not that hard to do. I have some students now that can do that kind of thing. And one of my students has been putting on the fly live trades into our chat. Thank you, Adam. I appreciate that. And has been doing amazing, actually. He's doubled his account in the last couple months trading live. So that's awesome. Congrats to Adam. And I'm hoping that everyone that watches this video also within a short period of time is in the place where they can double their accounts. It's an absolutely powerful thing to be able to double your account in short order. So that's the kind of thing we're trying to do here. Most channels are going to tell you that's impossible, but we've got the math to back it up. We've been doing this for a while now, and yeah, it's amazing. So yeah, I hope to see you on the trading floor. Hit me up if you have any questions.